In this video, I want to break down my $44,000 brokerage account and go through my specific investments in that account and my long-term plan. In this account, I'm invested almost entirely in ETFs with broad market, VU, growth, XLK and SCHG, and dividend ETFs, SCHD and DGRO. I have one individual stock and that's Meta, but I'm going to be adding Bitcoin to my portfolio, and I just made a video about that and y'all should go check it out. I'm going to be explaining why I have all these positions in this video as well. As always, this video is not financial advice, so please don't copy and paste exactly what I'm doing. Go do your own research first. This video is to provide transparency and show you what a 26-year-old engineer is investing in on the journey to building my financial freedom. Let's get started. The largest portion of my brokerage account is allocated to VU, and that's about 30% of my portfolio. This is the foundation of my portfolio, and frankly, all the other investment accounts also have VU as its foundation. The S&P 500 has been a reliable workhorse, returning about 10% per year on average. For a foundational ETF, 10% returns is perfect for me because it's very low stress and I know what to expect. Average returns over a long period of time is exactly what I'm looking for. Have you ever heard the saying, if you can't beat them, join them? That's how I feel when I invest in the S&P 500. Broad market funds like VU give me exposure to the top 500 companies in the United States in one ETF, which means I'm not betting on any single company to be a winner. I'm betting on the overall growth of the US economy over time. Now, I'm going to be clear that VU is not the entire US stock market, it's just the top 500 companies. The entire US stock market would be tracked through VTI, and the entire world market can be tracked through VT. If you do not want only US stocks, then you should look into something like VT. I like broad market ETFs like VU because they reduce single company risk, require basically zero maintenance, and historically perform very well over long periods of time and beat most investors that are trying to pick individual stock winners. This portion of my portfolio is designed to be boring, reliable, and consistent, and that's a good thing for my long-term investment plan. My core holding number 2 is my growth-focused ETFs, and for these I invest in SCHG and XLK, and these account for about 35% of my brokerage portfolio. I like investing in these growth-focused ETFs because I see technology dominating for another 20 plus years into the future, and as an investor who has a long time horizon before I need to live off these investments, I can live with the volatility and the tech bubbles here and there. Growth ETFs hold companies that reinvest heavily, they scale faster, and they aim for long-term capital appreciation and higher total returns, rather than having to distribute money and income to shareholders. Because of this, growth has significantly higher total returns over the last 5 to 10 years than many other ETFs, and I see this trend continuing in the future. Now, I just talked about how VU is the steady foundational ETF for me, but I also think growth ETFs play a key part in my foundation of my brokerage account. I do not have a crystal ball for when the next tech bubble is going to pop, but if there is a bubble and these ETFs suddenly lose 50% of value in a year, you best bet that I'll be continuing to dollar cost average and buy all these ETFs at a fire sale. I'm a long-term investor in these ETFs, and I have no problem stomaching the volatility. I expect these to be my best performing asset over the next 20 years, along with VU. Now, I'm not going to be 100% into tech because I do like to keep a diversified portfolio, and you'll see in the next ETF that I cover how I plan to diversify outside of VU that is tech heavy and outside of these specific tech ETFs. And I maintain VU as my first foundational ETF because in a world that tech doesn't recover, VU is just automatically going to rebalance its portfolio. And I still have a huge percentage of my portfolio invested outside of tech. I just invest a decent amount of my brokerage into tech because, like I said earlier, I believe in the long-term play of technology. This section of my portfolio adds upside potential without requiring me to constantly monitor individual tech companies and have to pick winners. The final major ETF category in my brokerage account is a dividend-focused ETFs. I invest in SCHD and DGRO, and this accounts for about 25% of my portfolio. Even though I'm still early in my investing journey and have so much time for compounding interest, I like having some exposure to dividends for stability and consistency. I'm reinvesting every dividend that I get, and the idea here is that over a long period of time as I near retirement, I can have a steady dividend cash flow without having to sell out of any of my dividend positions. These two ETFs have not had near the total return as XLK, SCHD, or even VU, but these dividend ETFs play a role in smoothing out the volatility and not keeping all of my eggs in one basket for all my ETFs. For a small time period back in 2024, I invested in JEPQ, which is a high yield monthly paying dividend ETF. However, it was not a build for my long term growth, so I removed it from my portfolio and took that money and reinvested it into SCHD. JEPQ might be a nice play once I get closer to needing to live off this portfolio or want to retire early and need a monthly dividend income. But for my current situation, because I'm reinvesting all the dividends and I want growth, it just didn't fit my current investment goals. And the other 10% of my portfolio right now is split between Bitcoin and Meta. I randomly chose Meta, and it's done really well for me, but my plan is to take the 5% that I have invested in Meta and also start buying up gold and silver, just as an additional layer of diversification for my investment portfolio. One of the most common questions I get is why don't I just keep picking individual stocks instead of ETFs? And the honest answer is that individual stock investing requires either a significant time commitment to fully research and understand each company you're investing in and their projections, their balance sheets, etc. And I feel like I personally don't have a real edge on the market, so I invest in passively run ETFs, which track a specific section of the market or a top portion of the market as a whole. For me, focusing on my career, focusing on getting promotions at my current job, increasing my earning potential, and consistent investing gives me a better return on my time than having to research individual companies, their earnings reports, and trying to beat the market with picking individual stocks compared to ETFs. That doesn't mean individual stock picking is bad. There's some people that have had success picking companies like, let's say, Nvidia, Palantir, or even my success with Meta, and many more like that have phenomenal returns over the past few years. Just in my future, I don't want to have to focus my time on researching these individual companies, so I'm going to stick to the easy route and go with ETF investing. So, talking more about Bitcoin, why am I investing in Bitcoin? I view Bitcoin less as an individual stock and more like a long term asymmetric bet. It's ultimately a hedge against rapid inflation and the government making big changes to monetary policy. Bitcoin for me is a similar play as investing, like I talked about earlier, in gold or silver. While they're not quite the same, they have the same purpose in my investment strategy. I'm not betting my future on it. It's really a small percentage of just my brokerage portfolio. I don't have any Bitcoin or any cryptos or gold and silver in my retirement accounts or Roth IRAs. But I do believe a small allocation in my brokerage account can make sense as part of my overall diversified portfolio. So, what role does my brokerage account play in my overall strategy? Well, my brokerage account is what I'm using for an early retirement. It complements my 401k, my Roth IRA, HSA, and other long term investment accounts by giving me flexibility to retire early and pull that money out whenever I want to. My current goal is to do like a barista fire at like 50 years old, maybe, meaning I can quit my main job and get a part time job just doing something I enjoy while being able to spend more time with family. I want to invest in this brokerage account because eventually I don't want to have to trade my time for money anymore. That's how I define financial freedom, and that's what I'm chasing for when I invest so aggressively in my 20s and going into my 30s. So the $44,000 in my brokerage account isn't flashy by any means, but I think it's a good starting point. My goal for 2026 is to grow this brokerage account to $60,000 while first maximizing my tax advantage accounts. And that's pretty much all I wanted to cover in this video. So if you're new or an experienced investor in your investing journey, leave a comment down below what your favorite investing account is and how much you plan on investing in 2026. If you like this type of content and want to grow in your personal finance knowledge, hit that like button and subscribe to the channel for more videos just like this one. I'll see you guys in the next one.